Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the 6 p.m. start of the week session in the Forex trading room for March 22nd of 2020. We'll be going through our standard agenda, a look at the prior week's results, a look at the currency strength meter for the last 37 days, fundamental announcements in our calendar for the coming week, a look at the charts on the dailies for the major pairs, any setups we see in progress, and a few words in conclusion. No activity in the long-term ledger. We didn't take any trades this week nor closed anything out. In fact, the account is all cash right now. We're probably going to be entering heavy once I deem the market has bottomed out, and we'll start making some long-term gains on the retrace. Our markets recovering are a lot more manageable and tradable than trying to guess when a black swan of the nature of the coronavirus is going to happen. So we usually will not catch long-term gains on a black swan, but we will pretty much catch all of those gains on the eventual recovery, and there always is a recovery. So stay tuned for good news on the long-term account a little bit later once things have started to go back. The actually lost for word. This is not last week's results. This is the prior week's results. So if you recall from our session on the 15th, yes, on the 15th, this was the chart we were looking at for our intermediate term ledger. We were up 77% for the fiscal year with 2 weeks to go. Now, last week, that for the first time in my life, I really am at a loss for words. I don't know how to describe it. I don't know how to say it. 40% in 1 week is something I had never in my life ever done. The entire year has been fantastic, but this last week just blew everything out of the water. We traded quite a lot. I think we did more than 20 trades throughout the week, so you're not even seeing all of them. Collectively, they added 40% to the account. We not only reached 100% gains for the fiscal year, but we blew right through and ended up at 116.39%. So that is something that I hope to see happen again, but I can never actually guarantee it. Just keep hoping. So that is where we are with the intermediate, and moving on. Week 26% on trade. We even had quite a few losers there. 3 of them ended up being losers, but 2 of them in particular, the 2 Aussie dollar trades collectively gave us more than 70% of the gains for the week. You can see $242 on one of them, 207 on the other. So again, a brilliant week all around on not because I'm great at trading, though all modesty aside, I probably am, but because the market was in such a giving mood. This cannot be done under normal market conditions. Notes and opportunities for, as I said, media reached 100% gains for the fiscal year and then just kept going. The short-term account went from recovered, because we had been under a drawdown for quite a while late last year, fiscal year. The only bad news, and of course this was just to be expected, our live event is at this point postponed until after the coronavirus crisis is over. I would have ended up having it regardless. I don't care if I was the only one in the room, but at this point we are under restrictions in Pennsylvania on any sort of gatherings. The hotel obviously is canceling all conference rooms and such until the crisis is over. So there's no way I could have it in the hotel where it was planned. So again, regretfully, we are going to have to postpone it. So stay tuned. We will be providing information on new dates as soon as we have them. Strength meter for the past 30 days and the past 7, we can see how volatility has just gone through the roof. We were at 19% last week for the month. Now we're at 33%, and it just is not stopping. We've had extreme reactions out of the metals, out of the currencies. Everything is just going ballistic. I will point out something very interesting here. Usually in times of crisis, you see metals outperforming everything else. So silver and gold will pretty much beat the market. This time has been completely the opposite. Silver has crashed. Silver is at its lowest in years. In fact, I am buying silver like there's no tomorrow. So some of the profits from Forex trading, I am putting into silver, and I don't care how long it takes to recover. I like having silver and I like having gold. Silver right now is at bargain bottom rates. There's no other way to express what silver is doing. So if you have any spare money and you don't mind parking it in something that may take quite a while to come back, but I think when it does come back, it'll come back with a vengeance, I would start buying silver. I think it was trading at 11, maybe $10 an ounce when the market closed on Friday. Have no idea what it's trading at right now, but I would expect that that it's still pretty much at a bargain rate position. So that is where we are. Apologies for the whining dog in the background. I think I need to take him out and shoot him. Moving on, I'm not going to dwell too much on the movements in the currencies because this is an atypical situation. There is nothing I could say about, you know, the Aussie going down or the dollar going up that would make any sense. The market is in panic and it's reacting in panic, and there is no explaining this. You just have to be along for the ride. Fundamental announcement scheduled for this week. We are going to have the RBNZ, the Reserve Bank of New Zealand's interest rate decision, coming out on Tuesday at 9 p.m. So we will be trading that, assuming the Kiwis do not jump the gun and actually change the interest rate before then, as has been happening lately from a bunch of central banks, including the U.S. Fed. Did raise the rate outside the normal schedule. So we'll see. Thursday, we have the Bank of England's interest rate decision. Same comment. I don't know if they're going to be jumping the gun and doing something before then. The British usually are more scheduled and more likely to follow the rules. So very likely they will have it happening at 8 a.m. on Thursday, but we'll see. We'll be trading that one live as well. And I normally don't trade the GDP, but I will this time. So we're going to be trading the GDP out of the U.S. just to see the market reaction, if any. So so those will be the three events that we're trading this week. Commodity. And I should, as an aside, say that I loaded up on oil last week. I bought a bunch of contracts expiring in January of 2021, expecting that it will go back at some point to a more reasonable. So just like silver, I think oil is at bargain bottom prices. Note that oil went from January trading at 60-something dollars all the way to last Friday where it ended in the low 20s. That is a huge, huge move for that small amount of time. At some point, either OPEC will start restricting production or something else will happen and it will go back up to the 40s, the 50s, maybe even back to the 60s. So I bought enough time on my contracts till January of next year. We'll see how that plays out. That's something I do as well as trade the Forex. But I'm not going to be focusing on that here, but just giving a freebie for anybody who is paying attention to things like this. So I would expect a lot of these commodities to recover between now and January of next year, for oil and quite a bunch of others. Moving on to the Forex charts, starting with the euro dollar. We had a huge crash last week, and this was a big part of our gains. Again, I'm not going to be trying to explain any of this. That would be technical analysis. Technical analysis is useless when we're in a black swan scenario, and we're still in the middle of one. So the only thing we can say here is that it's broken through all lows not seen in years, and who knows where it's going to end. Pound dollar, same thing, breaking through all support, giving us lows not seen forever. I think this is an all-time low for the pound against the dollar, and it ended the week pretty near its bottom. Yes, it did recover, it spiked, it did all sorts of things. It's trading at 116. That's beating the Brexit low by a very wide margin, all the way down to the 113s before it finally started recovering somewhat. We're going to be very eagerly watching how the week opens to see what we can make of it. I've got 1 week left on my fiscal year. Fiscal 2019 for me ends on Friday of this week. A more prudent person would stop trading altogether and say, hey, 116% is fantastic. Now, I'm going to keep trading. I'll trade till the bitter end. So we'll see what this week brings us, and I'm very eager to see how some of these major currencies are going to be reacting as the market opens. USD JPY, same thing. Not quite the same thing. It has yet to break out of the top at the 112, but it's getting awful close to a full breakout. And then you don't know what else is going to happen to it. The reason it hasn't broken out, the yen is still to a high degree a safe haven currency, but it is crashing. But the fact that people are still putting money into the yen is why it hasn't broken out of its prior extremes like the euro and the pound have. USD Canadian is in obviously an utter collapse at this point. This was also a good chunk of our gains last week, though we did have a couple of losing trades as it did very, very volatile retracements. So another one that we're going to be looking at, this is going to give us either great opportunities to keep trading it up or as great opportunities to trade it back down. We're not married to any direction. I don't care if this thing goes up or if it goes down. All I care is that it moves in one direction or the other. Moving on to the USD Swiss, and which is why it also hasn't broken out of its range, but it's getting awful close to hitting parity and to keep going. Another pair that gave us quite a lot of our profits last week, as this move just exploded and moved hundreds of pips in pretty much a couple of days. The dollar, yet another breakout, and as I mentioned before, this gave us about 70% of our profits on the short-term account, and I think quite a chunk on the intermediate as well. It's at its most extreme ever, and it may keep going. So again, very eagerly looking at how the week is going to begin to see if we can grab a direction and hold on to it for as long as it moves. Kiwi dollar, same thing. And again, for those joining late, technical analysis is useless right now. We're in black swan. Look at those extreme movements in the last two candles. Look how it spiked down on Thursday and then spiked all the way up on Friday. That is a range of hundreds of pips. So being in the right direction of that trade is great, but you could just as easily have been in the wrong direction, which is why we take very strict risk control measures so that even if we're wrong and we know we're wrong, the losses are not significant. However, when we're right, the profits are very, very significant, again, to the tune of 40% in a single week. Aussie Canadians breaking out into uncharted territory, and who knows where it's going to end. And again, look at those long spikes on Thursday and Friday. It went in every direction at once. Euros, we are short on the Euro Swiss. So we're carrying a short for quite a while, our oldest open trade on the intermediate, and it's been very sluggish. Even the collapse of the euro last week didn't make it move all that much. So we're still waiting for a significant movement out of this pair. The problem being that both the euro and the Swiss exhibited weakness last week. So they were both moving in the same direction, which means that this cross was very, very. Euro pound moved up, moved down, moved hundreds of pips. So again, a very volatile pair. I don't think we traded this one last week, or if we did, it was maybe one trade. But we had already come from capturing that entire movement from the bottom to the top. So we made our profit in the euro pound. Probably not last week, but the weeks before, we certainly squeezed everything we could out of it. Euro JY is a pair that is very tough to trade. Look at that every single day, up and down by hundreds of pips with no rhyme or reason. You could as easily have made 300 pips as you could have lost 300 pips. So very tough thing to trade. So be careful with pairs like this that are going in both directions. Euro popped out and did a decent drop towards the end of the week. And I opened a trade on Friday, which is currently negative on the intermediate, but it is showing signs of trying to look for the bottom as the euro crashes. The problem is that the Canadian isn't doing too well either. But I do think, and this is just gut feeling, I could be wrong, and if I'm wrong, well, it's going to be a losing trade. Boo-hoo. And but I do think we may be in for a retracement towards the 147 range, in which case that trade is going to give us quite a nice little boost to kick off the week. How JPY, which you can see from back in July of last year, broke through, kept going, and then had a very sharp retrace Thursday and Friday. Again, this is one of those with the yen pairs. You don't want to be on the wrong side of that trade, but it is moving quite nicely. And this is another one where we took quite enough profit as it broke that trend line back in January. We've been pretty much trading it down the entire time. So again, looking to see if the direction, in which case won't be picking up even more profit from it. Aussie JPY, say a yen pair, so it did move very, very sharply in both directions, especially towards the end of the week. I think we took some profit on this one as well. We opened so many trades on the intermediate that I lost track, but the ledger is up to date. So if you want to see exactly what we traded, feel free to look at the intermediate term ledger. You'll find everything in there up through end of market on Friday. Euro New Zealand, the most volatile pair out of all of them. It actually moved up and down by more than 1,000 pips towards the end of the week. If you want to see a classic example of a black swan, this is it. In a single day, it moved up and down by 1,000 pips. And again, I caution people, you could easily be right, wrong, one of these movements, because there is no right or wrong. The market has lost all sense of rationality, and it's just going ballistic. And this pair was the most extreme example. We did not trade this pair. I'm going to say luckily, because again, we could have as easily lost as one. Pound Canadian also out towards the bottom, getting stopped by that rising trend line from way back in 2019. So we had some pretty decent movements out of the pound Canadian. This is probably the only Canadian pair that didn't go against the Canadian dollar. In this case, it ended up the week pretty much at the bottom of its most recent price movement, which gives me some hope that the CAD is actually starting to show a little bit of backbone, in which case we'll be taking full advantage of that. And last but not least, pound Swiss also breaking out of its prior range by a significant amount, but Thursday, Friday coming back to the bottom of that previous range. So another one we'll have to be very watch it very closely as the week kicks off to see if we're going to have another opportunity here. That is the end of our charts. And I try to highlight things that may or may not be happening for the past few weeks and for this week as well. everything is coronavirus. As I said at the top of the call and reminded people a few times along the way, there is no technical analysis that has any validity right now. Things are happening just whenever they want to. There is no support. There is no resistance. There is no Ichimoku cloud. There is no anything. Everything in the market right now revolves around the coronavirus and the impact it's having on the different economies. So you need to trade it that way. I will still be looking at the technicals. I'm a technical guy, but at the same time, I know when to ignore the technicals, and now is that time. And that is pretty much the end of the presentation. And my message here in conclusion, volatility is your friend until it isn't. And I think I've stressed that throughout this presentation. We made insane gains last week. It was a perfect storm. Could we have made more? Absolutely. I could have overtraded the market like there's no tomorrow. And instead of being 116% up, I might right now be 400 or 500% up in a single week. That's what high volatility can do for you. Why didn't I do that? Because volatility is a two-edged sword. Had the market turned and had I been over trading, and we did see market turns toward the end of the week, I could have easily taken the account down to zero. My thing is always risk control. You will never wake up to find your accounts at zero unless, we have the black swan to end all black swans and all stop losses aren't respected, this, that, and the other. But the way I do things, if the market turns, obviously I'm going to lose some money, but it's going to be a small portion. And usually it's going to be a portion of prior gains. I do not I've never wiped out an account. Every single time the market is going to turn, and you do not know when that's going to be happening. So certainly don't be afraid of trading, but you need to do it safely. You cannot take insane risks without at some point having to pay for them. Added this slide for probably more than a month now, and a lot of you have given me some very good advice in this regard, but I am trying to reach more people, trying to help more people in their trading. And some people honestly either do not know how to trade. I offer education, of course, but also some people, and I don't like saying this a lot, but some people cannot learn how to trade. They either don't have the right psychology, or they're in a point in their lives when they can't trade properly. Whatever it is, this is why we have the copy trader. And again, if you guys are a copy trader, which I know most of you are, then you had a 40% week as well on one of the accounts, and 26% in the other, and so on. So we do have products for everyone, but we want to get the word out. I cannot advertise this stuff, or I start sounding like all the scammers out there. So I refuse to do that. So I rely on you guys at this point to spread the word. And as an incentive, simply because I don't believe in selling my products cheap, right now the copy trader is at 1,200. When the fiscal year ends at the end of this week, it's going to go up significantly. I'm thinking 2,500. So if you've got anybody you want to recommend to join, this week is at more than a 50% discount if you look at it that way. You can still get in for 1,200, and I will not be raising prices on anybody who is a prior subscriber. If you bought it at 600 or 1,200, or I don't know, whatever it was, that is your price for life, so long as you don't let your subscription expire. So last week, to get it at 1,200 for anybody who is not a current member, tell your friends, tell your family, tell strangers, tell enemies, tell everybody. Thank you very much, folks. That is the end of the presentation. Okay, then I thank you very much. I will be sending a recording out very shortly, and I will talk to you guys tomorrow, 8 p.m. for our regular session. Have a great rest of a weekend.